Hello everyone. So for the last week update, we had two economic parameters and rest of the assets covering in this video. So starting with the index of industrial production, which was down by 2.4%, mainly due to the contraction in electricity and manufacturing. Though the healthy output was shown in basic metals by 7.2% and automobile components by 9.2%. There was contraction which was observed on export extensive products like apparels, textiles, leather. Also, output for both the consumables and the non-consumables contracted. November also saw slowed growth in infrastructure and the construction goods. Even though the manufacturing activity, as per the PMI index measured in the month of November, was close to 56, we still had a very low output in the terms of in the manufacturing sector. The second parameter was the CPI inflation, which numbers which came out. The CPI inflation number rose to 5.69%, still within the RBI limit for the month of December. The increase was mainly due to the fuel and the light prices. Also, fuel prices which had remained high. The rural economy is still facing high inflation. On the asset side, the first asset we discuss is oil. The prices have been volatile. This volatility continued with the US, the UK, and the allies having launched a war against Iran-linked Houthis rebel in Yemen. The US is trying to deter the Houthis from attacking international shipping lanes in the Red Sea, which have driven up the cost containers and disrupted the trade of goods between Asia and the West. Thus, the prices of the oil have risen to $78.32 a barrel, which are expected to fall down. On the gold, the 24-karat gold was last traded at 62,520 per 10 grams. Now coming to the markets, this week was a respite for the market with market touching all-time high. Sensex closed at 72,568.45 with a percentage increase of 0.75% for the week. The Nifty closed at 21,894.55 with a percentage change of 0.85%. Nifty Bank was lower at by 0.93% for the week, with closing at 47,709.80. Nifty Mid Cap and Nifty Small Cap rallied with contributing 0.25% and 0.69% change. If we look at the valuation of all the indexes, the Nifty 50 trailing PE has reached 23.3, which is well above the 5 years and above the 2 years average. The Nifty Mid Cap 150 trailing PE is at 27.3%, reaching the all-time high of 5 years and their 2 years average. So it becomes a point where they are very costly right now. The Nifty Small Cap 100 trailing PE is 29.5, above 2 years average and just above 5 years average. With this week's rise, the markets are looking quite expensive. The FIS and the DIS front, the FIS for the week sold about 3,900 crores of worth of equities. DIS were net buyers. They bought 6,858 worth of equities. If you look at the bond market, the Indian 10-year government bond was trading at about 7.178% yield. If you look at the yield curves, the short-term yield maturities yield curve, that was 2 years versus 1 year maturity, the yield has inverted in that range. If you look at the mid-term to short-term maturities and long-term to short-term maturities, the yields have been flattish for quite some time right now. So that is from my side.